You know the exact moment your business outgrows its current boundaries, yet the path to securing the capital needed for that next leap often feels blocked by a wall of traditional banking requirements. Many ambitious enterprises struggle to secure conventional financing simply because they lack the decades of operating history or the massive asset reserves that big banks prefer to see. This frustrating gap leaves incredible growth potential sitting on the table, waiting for a financial key that actually fits the lock. That key is often found in the Small Business Administration, which has engineered a powerful solution for enterprises caught in this exact financing gap. An SBA loan is not just another financial product. It is a foundational game changer designed specifically to empower your growth when conventional avenues fall short. By fundamentally altering the risk equation for lenders, this unique funding path transforms a standard loan application from a likely rejection into a highly probable approval. A common misconception is that the government is directly lending you money out of a federal vault. In reality, these are government-backed bank loans, meaning the Small Business Administration guarantees a significant portion of the borrowed amount. Explaining this distinction is vital because it means you still work with traditional lenders, but the federal guarantee acts as an invisible shield, drastically reducing the bank's exposure to potential loss. Because the lender's risk is minimized, they are far more willing to extend favorable terms to your business. This mechanism unlocks access to higher borrowing limits, longer repayment terms, and significantly lower down payments than you would ever find in the conventional commercial market. Suddenly, the capital required for a massive facility expansion or a critical technological upgrade becomes entirely accessible, allowing you to execute your most ambitious strategic visions without crippling your cash flow. The cornerstone of this program is the 7A loan, renowned for its incredible versatility across almost any commercial need. Whether you are looking to acquire a competitor, purchase heavy machinery, or simply inject a massive wave of liquidity into your daily operations, the 7A provides a highly adaptable framework. It is the ultimate Swiss Army knife of business financing, capable of scaling from a few $1,000s up to $5 million to match your exact growth trajectory. Securing this versatile capital requires demonstrating solid financial health, often evaluated through your EBITDA, which simply stands for earnings before interest, taxes, depreciation, and amortization. This metric gives lenders a clear, unfiltered view of your company's raw operational profitability and its ability to comfortably service new debt. Demonstrating a strong, consistent earnings history proves to the underwriter that your enterprise is a highly capable engine, ready to efficiently process and multiply the injected funds. Once deployed, those funds often go directly toward bolstering your working capital, which is the money available to meet your current, short-term obligations and fund day-to-day operations. A robust liquidity buffer means you are no longer stressing over payroll during a slow month or scrambling to cover unexpected inventory costs. Instead, your daily operations run with absolute friction-free efficiency, allowing you to focus entirely on driving revenue rather than simply managing survival. When your vision requires permanent physical expansion, the 504 loan steps in as the specialized tool for major fixed asset purchases. This structure is uniquely designed for acquiring commercial real estate, constructing new facilities, or buying massive, long-term machinery that will serve your company for decades. It involves a three-party partnership between you, a traditional bank, and a community-based certified development company, splitting the funding burden to offer you incredibly stable, long-term financing. The strategic advantage of the 504 structure is its ability to lock in occupancy costs and build permanent equity for your enterprise. Instead of facing unpredictable lease hikes from a commercial landlord, you transform your monthly facility payment into a wealth-building asset that strengthens your balance sheet. This physical expansion anchors your market presence, providing a permanent headquarters that signals stability and enduring success to your clients, competitors, and employees. A major hurdle in traditional commercial lending is the strict demand for collateral, which is an asset that a lender accepts as security for a loan, like real estate or equipment, which they can seize if the loan is not repaid. Many highly profitable, fast-growing service businesses simply do not own enough hard assets to satisfy a conventional bank's rigid security formulas. This asset deficit often derails perfectly sound expansion plans, regardless of how strong the company's cash flow might be. The federal guarantee inherent in the SBA system brilliantly bridges this specific collateral gap. While lenders will still take a lien on the assets you do have, the government backing compensates for any remaining shortfall, meaning a lack of physical assets will not automatically kill your application. This structural flexibility ensures that strong, cash-flowing businesses are evaluated on their actual performance and future potential, rather than just the liquidation value of their office furniture. Navigating the approval process does require preparation, patience, and a meticulous approach to your financial documentation. Lenders will thoroughly examine your business plan, tax returns, financial statements, and detailed projections to ensure the capital will be deployed effectively and repaid reliably. While the paperwork is undeniably comprehensive, treating this rigorous underwriting phase as a diagnostic health check for your business will make your enterprise stronger and more disciplined in the long run. The ultimate reward for navigating that detailed application is securing some of the most competitive capital on the market. This low-cost funding acts as a powerful multiplier for your growth initiatives, allowing you to hire top-tier talent, launch aggressive marketing campaigns, or aggressively scale your production capacity. The rigorous entry requirements effectively filter out unprepared competitors, giving your approved business a distinct, heavily capitalized advantage in your specific industry. A critical factor in this competitive advantage is the highly regulated APR, or annual percentage rate, which represents the true total yearly cost of borrowing money, including interest and essential fees. The Small Business Administration sets strict maximum limits on the interest rates that lenders can charge, protecting you from predatory lending practices and ensuring your debt remains entirely manageable. A lower annual percentage rate directly translates to higher retained earnings, keeping more of your hard-earned profit inside your company where it belongs. While government-backed financing is ideal for major long-term investments, it is important to understand how it complements other tools like a line of credit. A credit line provides a revolving pool of funds that you can draw from instantly and repay as needed, making it perfect for smoothing out seasonal cash flow dips or seizing sudden, fleeting inventory discounts. Smart business owners often use a massive term loan for their primary expansion, while maintaining a revolving credit facility for agile, day-to-day financial maneuvering. Another distinct strategy is invoice factoring, where you sell your outstanding business-to-business invoices to a third party at a slight discount to access immediate cash. This rapid liquidity solution is incredibly useful when you have long payment terms with large corporate clients and cannot afford to wait 60 or 90 days to get paid. However, while factoring solves immediate cash flow crunches, it does not provide the massive, multi-year capital injection necessary for structural business transformation. Similarly, a merchant cash advance offers rapid capital by providing an upfront lump sum in exchange for a percentage of your future daily credit card sales. While the speed of funding is incredibly fast, the effective cost of capital is typically exceptionally high, making it a highly aggressive, short-term tactical maneuver rather than a sustainable growth strategy. Relying on such expensive, short-term products for long-term needs can quickly choke a growing company's cash flow. In fact, one of the most powerful applications of the 7A program is refinancing that exact type of high-cost, short-term debt into a single, manageable monthly payment. By sweeping up expensive cash advances and high-interest equipment leases into one low-rate, long-term government-backed facility, you can instantly free up massive amounts of monthly cash flow. This debt restructuring maneuver breathes immediate life back into your operating budget, transforming a struggling balance sheet into a highly profitable foundation. Beyond just balancing the books, this stabilized financial foundation allows you to actively drive local economic expansion and job creation. When you secure millions in long-term capital, you are not just buying equipment. You are hiring new crews, expanding payrolls, and stimulating the broader commercial ecosystem around you. Your enterprise transforms from a simple participant in the market into a foundational pillar of your local economy, driving prosperity far beyond your own balance sheet. You can see this transformation in the physical reality of a fully capitalized business operating at peak efficiency. The newly acquired warehouse hums with upgraded automated machinery, while a fully staffed sales team operates out of a newly renovated permanent headquarters. The capital infusion is no longer just numbers on a spreadsheet. It is the concrete, steel, and human talent that propels your daily operations forward with unstoppable momentum. For you, the business owner, this level of capitalization forces a profound psychological shift in how you lead your company. You transition from a reactive manager, constantly putting out daily financial fires, into a strategic visionary plotting your next 5 years of market dominance. With the anxiety of undercapitalization completely removed, your mental energy is entirely freed up to focus on innovation, leadership, and long-term legacy building. In an unpredictable macroeconomic environment, having a low-cost, long-term financial fortress is your ultimate competitive advantage. While competitors with variable rate, high-cost debt struggle to survive sudden economic downturns or inflation spikes, your locked-in, heavily subsidized financing ensures you remain perfectly insulated. This stability allows you to aggressively capture market share and acquire struggling competitors precisely when the broader economy is facing its toughest challenges. Preparing to access this level of financial stability starts today, long before you ever fill out a formal application. It means meticulously organizing your financial statements, optimizing your corporate tax strategy, and building a crystal-clear, data-driven narrative about exactly where your company is heading. By operating your business every single day as if it is already under the scrutiny of a federal underwriter, you build an unshakable, exceptionally disciplined enterprise. Demystifying the complex world of commercial finance is about realizing that these powerful institutional tools are fully within your reach. An SBA loan is not a mysterious government handout. It is a meticulously designed financial instrument built specifically to reward your hard work, ambition, and operational excellence. By understanding and leveraging these unique funding paths, you take absolute control of your financial destiny, ensuring your business has the exact fuel it needs to reach its ultimate potential. If you want to see what your business qualifies for, complete the quick Brightside quiz. http://brightside.capital.io business survey. It only takes 2 minutes, and it's a simple way to start reviewing your funding options.